Welcome to the Radio Revenue Podcast.
Hey, it is great to be here.
So today we are doing a deep dive into a company that, well, they're essentially trying to pull off a magic trick in the energy sector.
Yeah, that's a good way to put it.
We're looking at Enphase Energy, Inc. And I'll be honest, before I sat down and read their 2025 annual report,
Form 10K, right?
the 10K they filed with the SEC in February 2026, before reading that, I just sort of thought of them as, the solar panel guys.
A lot of people do.
Mm.
But this report paints a very different picture.
It really does. It's not just a solar company anymore. They call it a global energy technology heavyweight, a full home energy management ecosystem.
Exactly. And the scale is just huge. I mean, they shipped over 86 million microinverters.
Which is wild. But the real story here, the hook, for you listening, isn't just the hardware. It's this massive pivot they're making in U.S. manufacturing.
Driven by some very aggressive new legislation.
Right, this new piece of law called the One Big Beautiful Bill Act. Plus, we're going to get into technology that literally lets your car power your house.
Which is the dream, really.
It is. So our mission today is to unpack all of this. We want to see how a company navigates shifting political winds, tariff wars, and this whole transition to full electrification without losing its charge.
Let's get into it. The 2025 financials are a great place to start, because the top-line numbers look fantastic on the surface.
They really do. I was looking at the snapshot for the fiscal year ended December 31st, 2025. Net revenue hit $1.47 billion.
Right.
That's an 11% increase from 2024. And their net income rose significantly, too, up to $172.1 million. So at first glance, I'm thinking, okay, great year. Everything is firing on all cylinders.
But then you look at the geographic split.
Yeah, that was the big aha moment for me. It's a stark contrast.
It's basically a tale of two markets. If you break down that data, U.S. revenue jumped 27%. It hit $1.19 billion.
Massive growth.
Yeah.
But
then international revenue dropped 28%. It fell all the way down to $284 million.
that is just a brutal drop-off. Why is the U.S. booming while the rest of the world is just shrinking for them?
Well, the report attributes the international drop to soft demand in Europe, mainly. There were lower utility rates over there, and just a general economic slowing. People weren't investing as much in home upgrades.
Okay, so Europe slows down. But why did the U.S. jump 27%? Was it just organic demand?
Partly, yes. But it was heavily driven by what they call safe harbor transactions.
Safe harbor. I saw that in the report. What exactly does that mean in this context?
Basically, a lot of distributors bought massive amounts of inventory right before the end of the year to lock in older tax benefits before the laws changed.
Oh, got it. So they're kind of artificially pulling future sales forward into 2025.
Precisely. It inflates the 2025 numbers a bit. And on top of that, you have to look at their gross margin, which actually dips slightly to 46.6%.
Which is still healthy, but why the dip?
It's a mix of the product types they sold and some increased tariff costs. But, and this is crucial, that margin pressure was heavily offset by new U.S. manufacturing tax credits, specifically the AMPTC.
Okay, the Advanced Manufacturing Production Tax Credit. And that segues perfectly into the regulatory roller coaster we need to talk about, the OBBBA.
The One Big Beautiful Bill Act.
Yes, enacted in July 2025. What does this law actually do to the solar landscape for the average person?
It's a total shakeup. For years, the industry relied on the old residential tax credit, Section 25D. You buy panels, you get a huge tax break. But that expired on December 31st, 2025.
Completely gone.
Completely. So the industry is pivoting fast towards Section 40AD. This is all about third-party ownership, or TPO.
Meaning leasing instead of buying.
Exactly. The new credits heavily favor businesses over individuals. So instead of you buying the system, a leasing company buys it, claims the commercial tax credit, and then leases the solar system back to you.
That is a massive shift in how people get solar on their roofs.
It changes the whole sales pitch. But the OBBBA goes further than just changing who gets the tax credit. It introduced incredibly strict new rules about where the hardware comes from.
Right, the domestic content and FEOC rule.
Yes. To get these top-tier tax credits, the products must have high U.S. domestic content. And they strictly cannot use components from foreign entities of concern. That's what FEOC stands for.
which is essentially targeting China and a few other countries.
Right, so Enphase had to move fast. They moved a huge chunk of manufacturing to the U.S., Arlington, Texas, and South Carolina.
And they are fully up and running there.
They are now shipping domestic content microinverters and batteries specifically to qualify for these bonus credits.
And the financial impact of that move is just staggering. I saw in the report they recognized $238.7 million in AMPTC benefits in 2025 alone.
Almost $250 million.
Yeah. And that directly reduced their cost of goods sold. Without that, their margins would have looked a lot worse.
Absolutely. They adapted to the legislation to protect their bottom line. It's impressive corporate agility.
It really is.
Yeah.
Okay, so we've covered the financials and the politics. Let's get into the actual technology stack, because it goes way beyond just the panel on the roof.
Right, the whole ecosystem.
Let's start with the basics for you listening. Microinverters versus string inverters. Enphase is famous for the microinverter.
Yeah, traditional string inverters link a bunch of solar panels together. If one panel gets shaded by a tree, the whole system's power output drops. It's a single point of failure.
Like old Christmas tree lights. One goes out, they all go out.
Exactly. But Enphase uses microinverters. They put a small inverter under every single panel, so if one is shaded, the rest keep cranking at maximum efficiency.
Which is great. But in the 2025 report, they highlighted this new commercial product, the IQ9N3P commercial microinverter.
Yes. And the key detail there is the technology inside it. It uses gallium nitride, or GNN technology.
GNN. I've seen that in high-end laptop chargers, but why is it a big deal for commercial solar?
Because gallium nitride allows for much higher efficiency, and it can handle high voltage. We're talking 480 volts.
Which is what big commercial buildings use.
Right. And it does this without needing external transformers. It's a huge deal for commercial installations because it makes the systems lighter, more efficient, and easier to install on warehouses and retail big boxes.
That opens up a massive new market for them. But obviously, the sun goes down, so we have to talk about battery storage.
They've been very busy there, too. They discussed the IQ Battery 5P and the brand new IQ Battery 10C, which they started shipping in June 2025.
But the hardware isn't even the most interesting part of the battery setup anymore. It's the software. They launched this thing called PowerMatch in December 2025.
PowerMatch is fascinating. It uses AI to forecast both your solar production and your home's energy consumption.
So it knows when it's going to be cloudy, and it knows when you normally run your dryer.
Exactly. And it adjusts the battery output in real time to maximize your savings. It decides when to store energy, when to use it, and when to push it back to the grid.
It's like having a tiny energy trader living in your garage.
That's a great analogy.
Speaking of the garage, I want to talk about the EV charging, because this is the part I got most excited about. The IQ Bidirectional EV charger. They announced it in September 2025.
This is a game changer for the whole industry.
Yeah.
Bidirectional means it doesn't just push power into your car, it can pull power out of it.
V2H and V2G, vehicle to home and vehicle to grid.
Right. An electric vehicle battery is massive compared to a standard home wall battery.
Sure.
With this charger, if the grid goes down, your car can literally power your entire house for days.
And it's all managed through their app, right?
Yes, it ties the car directly into the Enphase ecosystem. And the V2G part means you can even sell your car's stored energy back to the grid when prices are high.
That is just incredible. And before we move on from the tech, I do want to mention one thing that stood out to me as a really smart customer service move. They mentioned a software update for legacy support.
Ah, right. The backwards compatibility.
Yeah. They made it so older IQ7 systems can work seamlessly with the new IQ8 expansions.
Which is vital. You don't want the stranded asset problem. Early adopters hate it when they spend $30,000 on a system, and 5 years later they can't expand it because the new gear doesn't talk to the old gear.
Enphase avoided that. You can just add the new stuff right alongside the old stuff.
It builds a lot of brand loyalty.
It really does. Okay, so we've painted a pretty rosy picture here. Great tech, adapting to laws, strong U.S. revenue. But we need to look at the risk factors.
Yeah.
The be careful section of the 10K.
Always the most revealing part of an annual report.
Absolutely. And the first huge risk is supply chain vulnerability. We talked about how they moved manufacturing to the U.S., but there is still a massive China factor here.
Yes. Despite assembling things in Texas and South Carolina, they still rely heavily on China for the actual battery cells, specifically the LFP lithium iron phosphate cells.
And the really scary part is they only have 2 vendors in China supplying these cells.
Just 2. It is a massive choke point. If geopolitical tensions rise, or if those IFEOC rules we talked about get tightened even further, Enphase could suddenly find themselves unable to source the core component of their batteries.
It's a tightrope walk. And then there's the competition. They are not alone in this space.
Not at all. They're up against some heavy hitters. Tesla is the obvious one in the battery and EV space. SolarEdge is a fierce rival. And Huawei is out there globally.
What's the specific threat from them, just losing market share?
It's the threat of commoditization and pricing wars. If cheaper imports flood the market, or if Tesla aggressively cuts prices, it compresses Enphase's margins. And as we saw, their gross margin is already under a bit of pressure.
Got it. Now, another risk they highlighted was interest rates. Obviously, high rates hurt the solar industry because these are expensive systems and most people finance them.
Right, when money is expensive to borrow, fewer people buy $30,000 solar arrays.
But doesn't that shift to leasing the TPO model we talked about? Doesn't that mitigate the interest rate risk somewhat?
It does mitigate it, because the leasing companies have access to corporate debt, which can be cheaper than consumer debt. But higher rates still eat into the leasing company's margins, which eventually puts pressure on the hardware providers like Enphase.
Makes sense. Now, I saved the most shocking risk for last. Customer concentration. Did you see this number?
I did. It's arguably the biggest red flag in a whole report.
In 2025, one single customer accounted for 39% of your net revenues.
Almost 40% of their business relies on one entity.
If that relationship sours, or if that customer goes bankrupt, or even just decides to pause orders for a quarter, it's a massive blow.
It is incredibly dangerous to have that much of your revenue tied up in one client. Give that customer immense pricing power over Enphase, too.
Definitely something investors need to keep an eye on. Okay, let's pivot to the future outlook and strategy. Where is Enphase going from here?
It all comes down to the systems approach. They don't want to just sell you a piece of hardware. They are selling a walled garden ecosystem.
Like Apple does with phones and computers.
Exactly. Solar plus the home battery plus the EV charger, all are run by their software. Once you have 2 or 3 Enphase products, you're locked in. You're going to buy their next product because it all integrates perfectly.
And that integration leads into their strategy for grid services.
Right. Virtual power plants or VPPs.
Can you explain how a VPP works for the listener?
Sure. If Enphase has tens of thousands of homes in a city all equipped with their batteries, they can network them together via software. During peak demand, say, a hot summer evening, Enphase can use all those home batteries to supply power to the utility grid.
And the utility company pays for that.
Exactly. It helps stabilize the grid, preventing blackouts, and the homeowners get paid for participating.
That's brilliant. And finally, for the folks who don't want anything to do with the grid, they mentioned off-grid capability.
Yes, they now fully support completely off-grid configurations using the IQ8 microinverters, their batteries, and a generator. It's total energy independence for remote areas or places with highly unreliable power grids.
So to sum this all up, Enphase is really a company in profound transition. They are moving away from just being a hardware supplier to becoming a software-driven energy manager.
And physically, they are moving their supply chain to the U.S. to survive these massive regulatory changes like the OBBBA.
They're navigating a lot of complex currents. But before we wrap up, I want to leave you listening with a bit of a provocative thought based on all this.
Let's hear it.
With the expiration of those direct ownership tax credits and this huge industry shift toward leasing and third-party ownership, are we looking at a future where homeowners don't actually own their energy independence anymore?
It's a great question. You put panels on your roof, but you're just renting the power from a corporation.
Exactly. You're trading the utility company for a leasing company. Are you really independent? It's definitely something to think about.
It is.
Well, that is all the time we have for today. It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.